Good afternoon, ladies and gentlemen. Welcome to the DeepMatter Group PLC investor presentation for the full year results for the year ended 31st of December 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. And these will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Mark Warren, CEO, and Fraser Benson, CFO of DeepMatter Group PLC. Good afternoon.
Good afternoon. So thanks very much for enabling us to do our full year 2020 results, and thanks very much to our brokers for allowing us to use their offices. So my name is Mark Warren. I'm the Chief Executive of DeepMatter Group, and I think most of the participants in this call will be familiar with me. But what I'd like to do is start by introducing you to our new CFO, Fraser Benson, who joined us in November last year, and ask him to give a brief introduction. Then we'll go through the recent sort of progress of the business, provide you with detailed overview of the finances, and then open up the floor to questions at the end. So without further ado, over to you, Fraser.
Thank you, Mark. Good afternoon, everyone. As Mark said, my name is Fraser Benson. I joined as CFO in November of last year. Prior to joining DeepMatter, I spent around 9 years with Tradeweb Markets, which is an electronic trading platform in fixed income and derivatives. And prior to Tradeweb, my career spans retail, leisure, and some time in a marketing business as well.
Great. So thanks very much. So what we're going to do is just start off by telling you that 2020 year has been a year of substantial progress for the group. And what I hope to do throughout the presentation this afternoon is demonstrate to you that the market for the digitization chemistry is really coming to the fore and hotting up right now. And that we as a business are front and center in the minds of our customers, having signed 3 strategic data partnerships, demonstrated our value proposition to them. On the back of that, we have grown the number of trials, the number of users, and following through on that, we're starting to grow our revenue base. And I'm hoping to demonstrate to you also that we've improved our customer reach, both with the sales and marketing infrastructure that we've put in place and with some bootstrapped partnerships, which I will talk to you later as well. So just as a reminder, DeepMatter Group wants to be able to enable scientists to discover and develop medicines and other chemical compounds that transform people's lives by making discovery and development reliable and cost-effective, is at the heart of our vision. We build and commercialize powerful data platforms that enable scientists to easily perform and optimize chemical reactions by increasingly integrating chemistry with technology, ultimately allowing artificial intelligence-driven chemical automation. And sitting at the heart of our strategy is a unique perspective on collecting, structuring, and analyzing that data, thereby increasing productivity, discovery, and compliance gains. So just a little bit on our strategy and the objectives as a group. Our longer term goals are to revolutionize value in discovery and develop by developing high margin solutions, through software products and data partnerships, and ultimately, of course, increasing earnings through recurring revenue. In the shorter to medium term, our approach to do that is through data-driven innovation and product development, growing our user base through specifically data partnerships, and focusing on the development activities that are made out in our product roadmap. I think that the market opportunity for us integrating chemistry with technology has grown a lot in the last few years. Lab 4.0, or Lab of the Future, is here now in our industry. Digital innovation has demonstrated that it can greatly grow value and revolutionize how chemistry is done. You only have to look at R&D expenditure, which was something in the order of 179 to 200 billion in the last few years, but the declines continue, so the returns continue to decline. That's because 50% of science is irreproducible, and that has a massive ongoing financial impact. And the industry is increasingly accepting that there's a productivity gain in going digital. And don't just take my word for that. Take a look at the work that's been done by the likes of Accenture, who are looking at how these discovery, productivity, and compliance gains can impact the industry, and ultimately through the technologies that we are using as a business. So things like machine learning, AI, Internet of Lab Things, robotics, and the like. The specific impact of digitization, not just generally in the pharmaceutical industry, but also in specifically in chemistry, has recently been demonstrated in publications like Chemical Engineering News, Chemistry World, and the SCI publications. But it's important to say that DeepMatter is at the center of people's thoughts as we look more and more to AI-driven chemical automation in the future, derived from really high-quality data out of the laboratory environment. So having sort of talked to where we think the market opportunity is for the business, and the fact that it is growing and we are confident that we operate in the right space, I want to just talk to you about some of the recent progress in the last year. Despite the global pandemic, with typical lab occupancy being perhaps 30 to 70% of what it might normally be, and in an almost non-existent laboratory practice in the academic sector, 2020 and 2021 proved to be a year of good progress. We started with the announcement in conjunction with our CRO customer, O2H Discovery, that we had demonstrated the value proposition for productivity gain in our business. We showed with them that we could increase the yields of chemical compounds that the companies were manufacturing by some 50% typically. And that shows massive cost effectiveness for industry, because they don't have to continually remake compounds for clinical testing. We'd shown a reduction in the error rate of the science that was being done, meaning that chemistry could be done more reliably in a more focused manner, and resources could be better put to work. And we saw that that ultimately results in the potential for hundreds of thousands of pounds worth of savings with any one particular partner, more than justifying the expenditure on our technology. I think that collaboration with O2H went on then to lead to a number of other partnerships. And I'm going to go on to the next slide before coming back to this one again in a moment. There were 3 strategic data partnerships that were announced, notably a 3-year contract with Team of Chemistry for technical data services and access to our proprietary algorithms. That's a 3-year paid-for contract that starts to manifest itself this year. Second was a multi-year licensing agreement with Merck to provide proprietary chemical structure and reaction data for a selected application that we've not talked about in the market in terms of what the application is, which included upfront payments, research payments, and trailing royalties. And finally, we entered into a data partnership with the University of Nottingham at the GSK Carbon Neutral Laboratories for Sustainable Chemistry to support the development of machine learning models in sustainable chemistry, an area of particular interest to the industry right now, for where there is a significant lack of understanding and chemical knowledge available around these reactions. And we have the opportunity, I think, to demonstrate that we can create intellectual property from the data that we own from that collaboration. These three collaborations really manifested themselves on the back of the productivity data that we demonstrated with O2H earlier in the year. The other area that we've not talked so much about this year, but we anticipate doing in due course, is around our collaborations where we've not just demonstrated productivity gain, but we've developed evidence of the discovery value proposition, where we look to create intellectual property that derives from the data that we have. And in conjunction with the likes of Novartis and the University of Glasgow, where we've announced that we are working, we anticipate that there will be some evidence of this discovery proposition in the market. I think we have, prior to 2020, taken our time to grow the data that we collect from our customers through traditional means by dealing with individual companies directly with our own sales force and our supporting application science team. In 2021, we saw the company pivot, as well as using our own sales force, to using some technical and commercial partnerships, seeking proprietary data content with our rapidly increasing user base. Unapologetically, we've done some bootstrapping partnerships in the COVID environment, announced with Waters, which is both a technical and customer-facing partnership, and one with Elemental Machines, a US-based digitization business with reach through to the largest biotech and pharma community in the world in Massachusetts, where we are working closely to distribute our products. So just a little bit about our customer base before I hand over to Fraser to talk about the finances. In the last year, 5 of the top 10 pharma companies are part of our globally distributed customers. We have, in total, 40 customers, the top 20 of which represent the vast majority of our revenue. The bottom 20 are likely to be new trial users, where we receive a modest amount of money for the trial experience before they try to convert through to a fully fledged license. We've seen an increase in the number of users, up by 18%, and we've seen an increase in the number of trials, up by some 300%. And those increases ultimately have leading indicators, I think, to where our revenue might go. And additionally to that, what we are doing is demonstrating to the industry that we're providing them access to the largest numbers of chemical reactions and data points for data taken directly out of their laboratories, for which they can have absolute confidence in their applications. So with that, perhaps over to you, Fraser.
Thank you, Mark. So I'll just run you through a few areas of the finances, some graphs here, some bits I'd particularly like to point out, and a few other areas that I will just speak to as well. So I guess logically, if we start with revenue, as Mark has already mentioned, and you've seen in his slides, our revenue was up just over 10% versus last year. And I think it's important to sort of call out that is across both segments of the business. So we've seen revenue growth within the acquired InfoChem products, and also revenue growth within the digital glassware platform too. So to touch on those two areas in turn, I think with the InfoChem products, we were pleased to see sort of resilient trading in those products across the sort of pandemic. During the year, there was a substantial development made to the IC Synth product. And I think the combination of that development plus some development of our own sales and marketing capability in-house has contributed to a number of those leading indicators that Mark has already touched on, and that I will sort of touch on again in a moment. On digital glassware, revenue is also up. Obviously, it's from a smaller base. And again, that's really testament to the fact that we continue to work with this enhanced sales and marketing capability that we have in the business now, working through that to build interest, work with academic partnerships, and really start to move to more and more revenue generating engagements with particularly organizations in the CRO space and pharma space too. I think the combination of all of that work, as Mark has sort of already touched on, we've seen some really nice leading indicators now. We've got web traffic on our website up over 110%, pipeline growth, trials up 300% year on year. And it's worth mentioning that a lot of those trials came during the sort of final quarter of 2020 as well. So the work continues to complete those trials and convert to full paying customers. I think to touch on the costs now for a moment, there's two areas that we've obviously got highlighted in the graph there. Starting with research and development costs. I think this is a point that I really want to emphasize, which is that we have continued to invest in our products. We see that as absolutely key. And it's really important to maintaining our sort of competitive position. When people look at our financial results, you may think that our research and development spend has actually reduced year on year. Now that is because that large investment that we've made in the development of IC Synth, we have actually for the first time capitalized the cost of that development. We have hit the accounting criteria for capitalizing that cost. So there is, in round numbers, 300,000 of cost that we have taken to the balance sheet. And so that is the sort of reason for the multicolored 2020 block there. We are adding back in so that you can see the full impact of that investment cost. I think the second area to touch on is our administration costs. So during, I think, these conversations a year ago and during the fundraising that happened during 2020, one of the things that the business said it was going to do was build out that sales and marketing capability, because at that point we lacked people and skills in that area, and it was something we were clear we needed to develop. That is something we have done. We now have a sales and marketing team, and so that really has been the main driver of that increase in administration costs of just over 100,000. I think two other things that are worth touching on, aside from those general themes, are in the background we have been continuing to right size the cost base of the Infochem business and share the knowledge from that acquired business throughout the organization so that we are really maximizing the benefit that we get from that experience and knowledge. And I think finally to touch on, like every other business, there has been a level of reacting to the pandemic and managing our cost base in light of that. So as you may have seen from our report and accounts, we did for a short period furlough some of our staff right at the beginning of the pandemic, and we did use the Kurzarbeit scheme in Germany. As I say, the UK impact of that was very short-lived, and the German impact persisted a little bit longer just because it's a far more flexible scheme. But as I say, like any business, the measures were taken at the right time, and as we saw that the revenue impact was marginal, we moved out of those schemes. I think if we can, and I should add, the upshot of all of that for the year is that we reduced our loss, 2.4 million loss for the year 2020 versus 3 million for 2019. So that is a reduction of 19% in our loss for the year. Okay. Moving on to the balance sheet, just a few things to touch on here. I think overall the story of our balance sheet is that there is very little change year on year. Our net assets at 8.9 million for the year are within 100,000 of 2019. It's worth touching on the fact that our cash position at the end of 2020 is 2.6 million. Again, exactly the same cash position we had at the end of 2019, but that is reflective of the fact that obviously in June, July of 2020, we did raise just over 2 million of new capital. So that has bolstered our cash position. I think the one other thing to touch on in terms of our balance sheet for the year is that we did issue £1.1 million worth of deferred consideration shares, and that was the sort of second stage of the Infochem acquisition. Obviously, the acquisition itself was in 2019, and this was the final part of that playing through. So I think, Mark, back to you.
Great, thanks very much, Fraser. So I think what I'm going to do now is just drop back a couple of slides and just talk a little bit, having covered what we've done in the last year, to start to think about where we're going in the year ahead. So I think the first thing just to say is that we have continued to focus a lot of our efforts in sales and marketing, and I mentioned those partnerships with Waters and Elemental Machines ultimately are designed to help us grow both our user base and our customer base. I think the other thing that we have tried to do is ensure through the year that we are seen as a key opinion leader in the space. And I think that's starting to really bear fruit right now. So people understand us for our science, people understand us for our innovative technology. But we were very lucky to recently be part of a precision manufacturing program alongside the University of Leeds, University of Sheffield, AstraZeneca and Samsung that we will see sort of manifest itself in 2022 and beyond. We'll also be joining with the Imperial College Chemistry Digitization group, which essentially involves us joining the Industrial Advisory Committee alongside the likes of Syngenta, BASF, Dr. Reddy's, AbbVie, all the people that we ultimately care about as our customer base. And finally, we're part of the University of Cambridge's sort of focus on digitization and control in chemistry labs, or robotic control in chemistry labs, something called the IDMT, based between there and Singapore. So I think from a key opinion leader perspective and science perspective, we're well respected now, and that is actually resulting in a lot of inbound interest in what we're doing, and hopefully we see that manifest itself in increased users and customers, as well as our own direct sort of sales efforts. Moving back to just sort of summarising the year as a whole, we've signed 3 strategic data partnerships in a market which we think is really hotting up. We've grown our revenue base, which is sort of following the faster growth in our number of trials and number of users. We have recurring revenues and improved customer reach. And so with that, I'm going to take a second out to pause, hand it back to the Investor Meet Company team, and then we'll look at the questions and seek to answer those along those lines.
Fantastic. Mark, Fraser, thank you very much indeed for the presentation. As Mark said, ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation's ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Mark, Fraser, perhaps before we move on to some of the live Q&A, we had a number of pre-submitted questions, and if you have to do so, if we could start with those. The first one reads as follows. Did you offer a reduced rate for the first year contracts? And if so, do you expect renewals to be at a higher rate in the future?
Okay, so I think consideration of for our contracts varies based on a number of different factors. The term of the agreement, the number of users, and the number of modules accessed. And actually, we also we will vary pricing depending on where the IP ownership ultimately resides in the data that's collected. But it's worth saying that we do have a sort of a combination of trials and full agreements. Trials are typically for a limited term with a limited number of users, and so that they will pay proportionally less than a full year contract. But ultimately, when those convert, we anticipate an increase in the number of users, and the average contract value, therefore, by extension, will increase.
That's great.
I think that answers that one.
Thank you very much indeed, Mark. The next one reads as follows, and obviously you're bound by the rules and regs to answer this, but do you expect to be bought out by a major pharmaceutical or technology company in the future? And this is part of the exit strategy for the company.
I'll hand over to Fraser to answer that one, I think. Thank you.
As you say, unfortunately, this is going to be a relatively short answer, but I think we are an independent entity at the moment. We are committed to delivering our roadmap and our strategy as an independent standalone entity. However, we don't exist in isolation. We exist as part of a much bigger ecosystem, and this is a sector where M&A activity is ongoing all of the time. So we have the way we want to go, but we don't exist in isolation.
That's fantastic, Fraser. Thank you very much indeed. The penultimate one we have here is, are you planning any further acquisitions or mergers?
So I can take this one as well with another fairly short answer. Again, really, we're sort of very focused on doing what we can with the capability that we have and the backers and backing that we have behind us. And we see lots and lots of opportunities and things that we want to do. But I think there is a recognition that sometimes the smarter and quicker thing can be to look for a transaction if a really sensibly thought through transaction can be made that moves you somewhere quicker. So it's obviously not something that we will rule out in any way at all. But we have, plenty to keep us occupied and do, just growing organically.
Thank you, Fraser. And the final pre-submitted question we have reads as follows: could you confirm how recent collaborations/agreements with the likes of Merck, Nottingham University, Team of Chemistry are financially structured around payments? Is this a yearly revenue, quarterly, monthly, recurring payment? Please could you provide some clarity around how you are charging these businesses for your products?
Okay, I'll answer that. So I think the first thing to say is that sometimes our partners are very sensitive to the financial terms of the deals being announced, so we don't always announce them. But I think I described actually in the verbal overview of the slides that we have a number of different contract types, ranging from one-off projects. We have trials, we have annual recurring revenue in some of our contracts, and data subscriptions, which might be made up of upfront payments, research payments, and royalties. We are still only in the beginning of establishing the revenue streams, some of these different revenue streams, and so they may well evolve. But I think I tried to show you that we will get paid for those TEMA deals and Merck deals in terms of the deal with Nottingham, as I think I announced. That's an intellectual property ownership, so we don't get paid for that one. But we think we're creating value that we can ultimately monetize as a result.
Fantastic. That concludes the pre-submitted question. Obviously, we've had a number of questions submitted during the presentation itself, and perhaps I could hand back to you. Just click on that Q&A tab and respond to those questions where appropriate to do so. And if I could ask you to read out the question also, that'd be fantastic.
So there's a few questions about revenue coming from different regions, and I'll try and answer those, I think, in collection. So what I want to just do is talk about where we see revenue and why we see it in those different regions, and then and hopefully that will cover most of the points, and also tie to the question about where revenue goes up and revenue goes down. So our customer base is based in Europe, which, for the sake of argument today, can include the UK, in North America, primarily focused on either the East Coast in the sort of Boston and Connecticut region, or left on the West Coast in that sort of slug where San Diego and San Francisco are. We also actually have quite substantial sort of CRO engagement in India, and are increasingly interested in reaching through into China. And I think we've done a limited amount in China so far, but there is a large chemistry CRO market there. And so we've decided to sort of bridge that through engagement with one of our UK partners, CI UK. So those are the four regions that we essentially do business in. Our customers will also vary. Their revenues sometimes go up, revenues sometimes come down. And I don't think there's any particular reason to believe that there's any one of those regions that is more problematic than others. I don't know if you've got anything you want to add to that, Fraser.
Nothing substantial. I think the only thing I would probably add is that a lot of people we do business with are multinationals themselves, and I think one of the things that we do see is that who we contract with, which particular part of that organisation we contract with, sometimes can change from year to year. So there will be a geographical shift in terms of potentially where our product is being used, or simply where they have chosen to contract with us as well.
Yeah, great. I think there's a question around our competitors, and I think this probably gives me a nice chance to just talk a little bit about what the environment looks like around us and where those competitors might reside. So I see three different groups that potentially compete with where DeepMatter is. The first of those are the scientific publishers. They're both partners of ours, but they are at some level competitive because they are the current standard for chemical reaction data. And what we're trying to do essentially is provide a higher quality source of data that can be analysed, be confident, and be used for applications that might be simply synthetic planning right the way through to robotic chemical automation. And I think so therefore groups like Elsevier and CAS definitely have an interest in what we do, and we have an interest in what they do. Some of that will be, as I say, synergistic, some of it competitive. The second group are probably the electronic lab notebook companies, who are the current keepers or repository of internal data within the large pharmaceutical companies. They have a big focus really on compliance in terms of the application of their data. Their systems have not necessarily been built to improve productivity and discovery, and I think that's where we see an opportunity to work both with those groups. But again, there is some risk of sort of competition because we're competing for similar sort of sources of data with them. And then finally, the hardware companies who are, I guess, collecting data right now, but again, have really built their businesses on selling instruments, not on monetizing the data. So these three groups all are somewhat competitive, but are also synergistic. And I think we sit in a very nice trifecta in the middle, which is why I think I have a great opportunity to monetize those three different groups under a sort of a common banner. The other thing that I think where we do see some competition is increasingly as groups move into chemical robotics, and actually again I think they're really using very much sort of dated approaches to data collection, and I hope that our platform will ultimately demonstrate that we have the best data source to enable autonomous chemical robotics. There's a question about advertised job positions and are they new roles? So we have both new open positions and we have some replacement positions as people migrate through the company.
And some of those positions will be replacement positions whereby we're actually looking to hire someone or something, a different skill to the skill that we had before as well.
There's a number of questions around forecasting, and I think, obviously it's not for the company to put direct forecasts out in the market. That's the preserve of research analysts, and we think we're probably at a stage where we are ready for research analyst coverage, and so I would encourage you to just keep an eye out for that. There's a question about patents and technology. So we have patent estate, we have intellectual, proprietary knowledge and know-how, and we own proprietary data. I think if you want to see what patents we have, the best thing to do is go and search the patent office to see which patents we have published. Some of them will be part of the previous company name, and some of them will be exclusively licensed from third parties as well. There's a question about whether the agrochemical sector is targeted, and the answer is yes. I mean, obviously we have a limited sales force, so that we have to balance our time between which sectors that they focus on, but we do see growth opportunities outside pure play pharma. So agri-sciences and fine chemicals, flavors and fragrances are all potential opportunities for the DeepMatter platform. There's questions about whether we see reluctance from the industry to share data. So I think that's a good question, and what I think we see is really data falling into three different buckets. The first is that there is some proprietary data which the industry is just not prepared to share, and for that we provide dedicated silos to those customers, and those silos are essentially closed, albeit we do, under most of those agreements, own the rights to some of the aggregate insights. Secondly, we see groups that are prepared to go completely open with their data, so big open data initiatives, and those groups are prepared to share data with anyone, albeit that no one necessarily gets an economic advantage to that. And then finally, I think we see some migration in the sort of middle ground to sharing selected data, which is in some way by the industry seen as pre-competitive, where there is the opportunity to generate commercial value. There's a question here about offices, and I'm going to hand that one over to Fraser.
Yes, so the question is, are your employees back in the offices yet? So our two main offices are located in Glasgow and Munich in Germany. So I think throughout the pandemic, we have enabled those staff who really need to go into the office. That has been a very small number on both sides and on occasional basis. And obviously we have been monitoring that there aren't ever more than a couple of people in either site. I think the rules in Glasgow have been loosening, albeit not in line with the rest of Scotland, but they have continued to loosen. So we do still have a few people occasionally going into the office. Obviously, we're waiting for the government's guidance in Scotland to change, to suggest people shouldn't still be working from home. In Germany is still in something of a different position. I don't think there is a particular timeline to when people should be returning to offices in Germany. So the situation in Germany is still, it's just a couple of members of staff when they need to on an irregular basis.
Mark Fraser, I think you've covered off pretty much all the questions you can, unless there's anything else there that you want to pick up on.
I think there's just one other question I can see here, which I will seek to answer with most of my knowledge. So there's a question here that says, you consider yourself a peer, and how do we differentiate from Clive Dix's C4X discovery? So I think if you try and understand the industry that's working in machine learning and AI to improve discovery and productivity in drug discovery, there are two things that you need to be able to do. You need to be able to determine which molecules to make and how to make them. What we focus on is the how to make them question. I think what you'll see from people like C4X is the why you make them. And that's probably the best way of differentiating between those two businesses. So really they're I guess synergistic peers again.
That's great. Thank you, Mark. And as I say, I think you have addressed all those questions you can from investors. And any further questions that come through, of course, the company will review all questions submitted today by investors and will publish responses where appropriate to do so. Mark, may I perhaps just ask you for a few final words just to wrap up before we give the attendees some opportunity to give you some feedback?
Yes, of course. So just, in summary, the market we're in really is hotting up. We've got 3 strategic data partnerships, which I think come on the back of having proved our productivity value proposition. The increase in trials, I think, is a good leading indicator for the future of our revenues. And we continue to work within the economic means that we have at our disposal to get as much customer reach as possible. And if you're to look for sort of 3 things in the coming year that we want to do, we want to ultimately grow our revenues. We ultimately want to grow and validate our data sets, and we want to get to a position where we validated the use of our technology in applications, not just in the data space, but also in the robotics space.
Great. Mark Fraser, thank you again for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments and is greatly appreciated and valued by the company. On behalf of the management team of DeepMatter Group PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon.